You know, when one of the world's largest investment firms drops its earnings report, it's never just about the numbers. It's really a peek into the future of the global economy. So today, we're going to unpack Blackstone's latest quarter and see what it's telling us about the huge trends shaping our world. Okay, let's just start with the number that stops you in your tracks. $1.24 trillion. That's how much Blackstone has in assets under management. I mean, to put that into perspective, that's bigger than the entire economy of countries like Switzerland or Saudi Arabia. It's just massive. And that's the big question we're digging into today, right? When a single company is steering that much capital, its strategy basically becomes a roadmap. It shows you where the smart money is flowing, and that has implications for all of us. And the view from the top couldn't be clearer. The chairman and CEO, Stephen Schwarzman, came out swinging, calling the quarter exceptional. That's a pretty confident statement. So let's see if the numbers really back that up. All right, first things first, let's check out the scorecard, the headline numbers that really define how successful this quarter was. What's really wild here is just how steady that upward climb is. A 12% jump in 1 year, at this scale? That's huge. This isn't just a company getting bigger, it feels like it's actually picking up speed. Now, this slide is all about firepower for what's next. This is what they call dry powder. It's basically a war chest of $188 billion, just sitting there, ready to be deployed. This is the cash they can use to pounce on new opportunities, whether it's in real estate, private equity, you name it. So, where is all this money actually coming from? Let's take a look under the hood at the firm's main growth engines. So, Blackstone boils its growth down to what they're calling the 3 I's. The first I is institutions. Think your classic pension funds. The second is the massive and growing insurance channel, which just shot up 19%. And the third I is individuals. That's the private wealth market, which grew 15%. It just goes to show how diversified their fundraising has become. Okay, let's switch gears to a topic that's been all over the news lately, private credit. There's been a lot of anxiety, maybe some confusion in the market, so let's try to decode what Blackstone says is really happening. And the CEO, Stephen Schwarzman, tackled this head-on. He basically argued that some recent high-profile defaults got unfairly blamed on the private credit market because of, and these are his words, misunderstandings and misinformation. And this is where they draw a really sharp line in the sand. They argue that the defaults making headlines came from bank-led deals that were sliced and diced and sold to lots of different parties. Their model? It's completely different. They originate the loans themselves, do incredibly deep research, and plan to hold them for the long haul. And the proof is in the pudding, right? The results of their model kind of speak for themselves. This number, 0.1%, is their average annual loss rate on their direct lending platform. And that's since it started almost 20 years ago, a period that includes the global financial crisis. That is an unbelievably low number. They have this great way of explaining it. They call it their farm-to-table model. Basically, by cutting out the middlemen and connecting their investors' money directly with the companies that need it, they believe they can get better, more reliable returns than you'd find in the public markets. So, with their strategy and credit looking pretty solid, where is Blackstone placing its big bets for the future? Let's turn our attention to the horizon and the global megatrends they're pouring money into. Honestly, you could look at this slide as a map of the future global economy. They're dropping billions into the stuff that powers the AI revolution, like data centers. They're financing the energy transition, funding breakthroughs in life sciences, and tapping into the massive potential of places like India. These aren't just small bets. They are all in on these huge transformative shifts. But you know, whenever you see this much money pouring into one area, you have to ask, are we just inflating the next big bubble here, especially with data centers? Well, Blackstone's president, John Gray, has a pretty direct answer to that. He says their whole strategy is about managing that risk. They don't just build these things and hope someone shows up. The key, he says, is they lock in major top-tier clients, we're talking the biggest tech companies on the planet, to super long-term leases, like 15 or 20 years, before they built. And get this, far from slowing down, the demand seems to be hitting ludicrous speed. This one stat is just astounding. Their global pipeline for leasing new data center space literally doubled from the second quarter to the third. That signals an absolutely massive surge in the need for computing power. Okay, let's pivot to a sector that's had a rough couple of years, real estate. After a lot of uncertainty, Blackstone is now signaling that a comeback could be on the horizon. So they've laid out this pretty simple 4-step path for how they see a recovery happening. First, the cost of money is coming down, which makes deals easier. Second, because of that, more deals are actually happening. And third, this is a big one, new construction has slowed to a crawl, which tightens up supply. Put it all together, and they believe it's paving the way for a recovery. All right, to wrap all this up, let's zoom out from the quarterly details for a second and look at the 40-year picture, connecting where this firm came from to where it thinks it's going. On the firm's 40th anniversary, this quote from the founder, Stephen Schwarzman, really says it all. The journey has been incredible, no doubt. But what's really telling is that even at this size, they're not looking back. The focus is squarely on what's next, with this powerful belief that the best is still yet to come. And this all leaves us with one final, pretty big question to think about. What we've seen today is that private money is stepping up to fund the world's biggest challenges, from the AI revolution to the energy transition. So as that trend continues, you have to wonder, in this new economy, who really holds the power?